Feeling whiplash from the recent market volatility? Hightower's Stephanie Link just dropped a market playbook that could flip your investment strategy for Q4. Should you play it safe or seize this moment to go all in?
So the onus falls on October, a little bit more volatility, and obviously it's tied to what happened last week with the isolated bankruptcies. And Becky, I do think that they are isolated. Also, China trade concerns, and then the action in crypto also didn't help. So you add it all up, and so it was a bit of volatility. But I think the reason that the volatility got bought is because the economy continues to chug along. The Atlanta Fed tracker just came out last week at 3.9% for the third quarter. Led by the consumer, led by the AI revolution. And also, I think the Fed Chair Powell was kind of dovish last week in terms of indicating potentially 2 cuts for the year and also ending QT soon. So you add it all up, and this all bodes well for earnings, which I think for the most part last week started on a very strong footing from the big 6 banks.
Yeah, Ed Yardeni's out with a note this morning, and he sounds very similar to what you're talking about with these things. He thinks that this was just a mini panic in an overall bull market. He said in order to get a correction, people have to be worried about a recession that doesn't happen. In order for a bull market, for a bear market, you actually have to have a recession. He doesn't see any signs of that. And your point that what we heard from Zion last week was maybe a one-off. The bigger banks sounded like things were really chugging along in what we heard from them on the earnings front.
I mean, the big 6 really, for the most part, very, very good. The net interest income, the guides were higher and better than expected. You had huge fee income growth. Investment banks, I mean, the numbers were like up 40% in fees, huge numbers there. They all said credit was fine. And I think the biggest takeaway was that the profitability outlooks are better than expected. The ROTCEs all beat expectations. And then I went and I looked at the regional banks, because obviously the Zion's issue was concerning. I looked at 9 different regional banks, Becky. Same thing. For the most part, net interest income was better, and the guides were higher, and credit was really good, and fees also really did help. So Zion's kind of a one-off, I think. By the way, the $50 million in terms of the charge that they took is less than 1% of their total assets. So I know it was scary, but I think a buying opportunity. And by the way, I think we're going to get really good earnings this week. We have a slew of them. Looking really forward to hearing from Procter & Gamble, Coke, GE Vernova will be an interesting tell because it's a renewables company and obviously part of that whole AI and power and the grid infrastructure. So it'll be really interesting week to see how it all plays out. I think it's going to be great.
Outside of the banks, I know you're overweight banks, but outside of the banks, what are your favorite names at this point?
Yeah, I still like the industrial plays on AI, so like the data center build out and the grid upgrade. So Quanta Services, Eaton, Vertiv, Rockwell Automation, those companies I think are going to do really well. I still like the home builders. I know they're so out of favor, but I do think interest rates coming down will be a nice tailwind for the group, and they're trading at like 10 to 11 times earnings. We get one company this week, Deckers, which is down 50% year to date. I own it. I bought it when it was down a lot, so I'm not down that much in it. But I think it'll be interesting to hear what the consumer is doing, what they're buying, and are they continuing to take market share from the likes of Nike and others.
Is there anything that you've soured on, anything you like less than you used to?
Energy. Like traditional energy.
WTI.
I own no energy stocks. Yeah, I mean, I had Diamondback, I had SLB. They're amazing companies. But when you have an administration that wants oil prices lower, and they have been going lower, it's going to be hard for this sector to do well, to outperform. So they're cheap. They're a lot of well-run companies. I just think they're going to be stuck in the mud for a bit. Plus, it's only 3% of the S&P 500 weighting. And so you kind of, as a PM, I don't necessarily need to be there if I can make up for it elsewhere.
When did you sell? What'd you say? Diamondback and Schlumberger? SLB?
Yeah. About 2 months ago. I think they're doing really good things. And in fact, SLB just reported last week really good numbers. However, I just think it's hard. The macro setup is really challenging at this point. So that's just a group that I think is going to take a while to sort itself out. Eventually, we'll look again at it. But I think between now and the end of the year, I think you still want to do tech, you want to do AI. You want to do these industrial plays on that same theme. I think discretionary is going to do well. Back to school was very good for discretionary stocks. I think you're going to continue to see holiday sales really well as well. So that's why I'm kind of interested on the whole Decker's story this week. But I think you want to be on the offensive versus the defensive, especially into the fourth quarter. Seasonally, this is a great time for the markets. And I do think you're going to see continued chasing from some of the portfolio managers that are underperforming their benchmarks.
Right. Got to get that in before the end of the year.